Are you in a situation where you want to buy a home, but you need to sell your current home in order to do it? I'm going to talk about that and tell you about one solution, recasting, that you may not have considered or you may not be even familiar with it. So I'm going to lay out some solutions for various scenarios so you can see one of these may be a good fit for your situation. And our contact information is below, so call us with any questions about any of this and consider subscribing. We do a new video every week. So first option, go ahead and list your home for sale with a contingency that the sale is subject to you finding a home. When you get a contract on your current home, you go out, you find a home to purchase, and when you do the contract on that home, you specify that it is subject to you closing on your current home. So you close on your current home and right after, close on the home you are purchasing. And the market is challenging for buyers, but a seller is going to be more likely to consider a contingency if your home is under contract. So that's a possibility. The other options work if you are able to qualify for another mortgage before you sell your home. And you may be thinking that even if you could qualify for a second mortgage, you don't want to be making double payments until your home sells. But you know, in this market, homes sell pretty fast. So if you did end up making double payments, it's probably going to be for a very short period of time. So here's some options to think about in that scenario. We have a client in a situation where they want to go ahead and purchase a home before they sell, and then when they sell, they want to take the net proceeds from the sale and apply it toward their new mortgage. So there's two avenues to take with money from a situation like this, depending on what outcome you want. If your goal is to pay off the mortgage on the home you're purchasing quickly, then you'd pay down the principal balance, keep your payments the same, and then you'll pay off that mortgage faster. If your goal is to use that money to lower your mortgage payment on the home you're purchasing, and that is the case with these clients, then you can request that the lender recast the loan. A mortgage recast is when you make a lump sum payment towards your loan, and then your lender will then re-amortize your mortgage and refigure your payments with the new lower balance. Your interest rate and terms remain the same, but you can lower your monthly payments because your principal went down. And just FYI, not all loans are eligible for a recast. USDA, FHA, VA loans are not eligible. And not all lenders will do a recast, and you don't see it advertised too much. So if this is something you are thinking about doing, be sure to check with your lender to see if this is a possibility and what they require in order to do it. Different lenders are going to have different criteria, different fees, and usually there's a minimum amount you'll need to put toward the loan in order to be eligible for a recast. It's usually a minimum of $10,000. So be sure to ask those questions. And there is a fee. It's not much. It's $250 to $500 usually, but it is a lot less than refinancing, where you'll pay several $1,000s closing costs. If you refinance in order to lower your payments, you'll be paying closing costs twice on the loan you got to purchase the home, and then again when you refinance. So this could be a good solution if this scenario fits your situation. But before selecting a lender, you'll need to make sure it's a possibility. And it likely will be with a lender that will service the loan, not sell it, because you won't know if who they sell it to will do a recast. I know that Rocket Mortgage services the loan, and they will recast. There are others, but you need to check when you're shopping for lenders. And if you are planning on paying off your new mortgage after you sell, you probably want to look for something a little different. A loan with lower closing costs, lower interest rates, An adjustable rate starts out lower, so that could be a consideration if you're planning on paying it off before it adjusts. There's a loan, the Champion loan at City National Bank offers an adjustable rate. It's an in-house loan. The closing costs are a little bit lower than a traditional 30-year mortgage loan. We have a client who bought a house with that loan because he's putting his house on the market, and then when it sells, he'll pay off that loan. And meanwhile, he saved money on closing costs and monthly payments because he got a lower adjustable rate. And then when he sells, he'll pay it off. And by the way, if you decide to keep that loan, not pay it off, City National will recast if you want to put a sum toward the loan, not necessarily pay it off. Another way to buy a home before you sell, if you have a lot of equity in your current home, is to take out a home equity loan, pay cash for the home you want to purchase, and then pay off the home equity loan when you sell it. An advantage of doing that is you'll be a cash buyer, which gives you an advantage when you go to buy a home. A lot of people that live in an expensive area like the DC, Baltimore area, they sell their home and they have a lot of equity in it, and they sell it and they have a lot of cash, and they come up here, buy higher quality home for cash. So that's a possibility. If you're thinking about moving to this area, we have a relocation guide that can be very helpful. It describes all the counties and practical things like how to register your car. So you can download that at meetmeinthepanhandle.com. Okay, thanks for tuning in, and I'll see you next week.